Good day, guys. How are we all doing? I hope we're all good. Back again with another example of a trade which we took based on what we learned or based on what we read on the Candlestick Trading Bible. So what we're looking for today, we're looking at how to trade the engulfing bar with Fibonacci retracements, and this is on page 120. So I'm just going to quickly scroll down. Okay, right, let's go. So this is where the Fib is. So how to trade the engulfing bar with Fibonacci retracement. Traders use Fibonacci retracement in different ways. However, the most important Fibonacci retracement levels are the 50% and the 61% Fibonacci retracements. Knowing how to use this tool in conjunction with Japanese candlestick will definitively maximize your profit potential. According to chart technicians, the most major moves retrace around the 50% or 61% of the Fib retracement. This knowledge will provide you with the ability to predict with high accuracy the next major move in a trending market. So these are some of the things you need to know. The major retracement levels are the 50% and the 61%. And it will provide us with the ability to predict with high accuracy the next major move in a trending market. So the market has to be trending. The strategy is very simple. Okay, what did I do here? Let me just quick this. All right, sorry about that. Sorry about that. The strategy is very simple. You define a clear uptrend or downtrend, and then you define major corrective levels using the Fib retracement tool. If you see an engulfing bar pattern matching up with 50% or 61% levels, it is a powerful price action trading signal, like we see in the chart below. So here we see there's this chart. Just move this. There's this chart, and we have a clear movement of price. Price is literally pushing up, right? Pushing up. So if you know the way we use the fib, we simply need to mark the lowest point where the impulse move started and the highest point. Lowest point has highest point. That's how we mark our fib. So here the lowest points of this impulsive move was here and the highest point was here. So here we can see the author in their fib. We've got the 50% retracement right there. We've got the 61%. And when price came back into that area, we now anticipate a continuation of the trend, which is already going on. So as soon as we see the bullish engulfing or the engulfing bar, we execute our trade. Stop loss, it will depend. You can put your stop loss outside the range as long as the risk to reward ratio offers you at least 1:2 or 1:3. Anything above that, I feel like it's just a bonus. In the example above, the engulfing bar price action signal matches up with 50% and 61% Fibonacci retracement level. The resistance level that becomes support is another confirmation to take this high probability setup. This trading strategy is very powerful. Here's another example below that illustrates the power of the 50% and 61% Fib retracement. Okay, let me just do this. Okay, there we go. I just want to share the book for now. All right. So this is an example of a downtrend. So you can see here price is just trickling to the downside, right? Then we had a bit of a major retracement here. Then price still continues to push down. So from here, the author pinpointed that this was the lowest high and this was the lowest low of this push down. So now what we're anticipating is a retracement and a continuation to the downside. So as long as you've got a narrative of what can most likely happen, then you simply know what to do. So you run your fib from the lowest high to the lowest low. So you can see there's the fib, 50% retracement, 61.8 retracement. Then when price got into that zone, we had this nice bearish engulfing candle. Entries that right there, stop loss above the level, then you can take 1:2 or 1:3 on this particular trade, or maybe 1:4, depending with your trading strategy. So trading the market from 50% and 61% fib levels means you are trading from better price levels. As a result, you'll put as many probabilities in your favor as possible, and that will allow you to become one of the most successful traders. So what I'm going to do is I want to quickly switch to the charts so that I can show you guys the live chart example of today's trade. So let's see. Okay, just give me a second because I wanted to just post the screen sharing. I wanted to send the results from my phone so that I can share it with you guys on the particular trade which I took. So let's see. All right, there we go. Let me just quickly save it. Today it's what, December 9th. Hey, all right, cool. Almost done. Right, I'm going to share my whole screen now so that you guys can see the charts. Okay, there we go. So I've got this trade on Crash 500. This is a synthetic index. This is the H1 time frame. So the first thing you want to check is your daily bias. What is happening with price? So personally, I like to put period separators. So let's start there. So on the daily time frame, it means wherever you see a period separator, it means this represents a month, 1 month, 1 month. So this was the month of November, October, September, and we are currently in December. So by looking at the price now, I also use moving averages, as you can see on my charts. So I'm looking at price. I'm not really worrying much about what's going on to the far left. I'm just looking at what's currently going on where I'm at. So I've got this huge impulsive move, a retracement, equal lows here. There's a chance this price can still push down on a higher time frame, but this will take some time to happen. All I need from the daily is a bias. So if you zoom in, you see that the daily price is actually rejecting on the 50 level, and we sort of took out this high of the current high of this month. We sort of took it out here with yesterday's candle, and we've got a rejection of the 50 EMA. This is a dynamic resistance level, so I'm expecting something like this. So we just start there. Since I've got a selling bias, I've got my bias already, I jump straight to H1. With H1, what am I looking for now? I need to look for something which shows me that price is actually pushing down. So remember, the first thing we're looking for is a trend. So we're looking for price to be creating lower highs and lower lows coming down. So from this particular price action, I see that this is my highest high, which took out the current high of this particular day, which was yesterday. So price melted. So if you were trading today, yesterday, you could have still done the same thing from the highest high. Maybe here you might have doubted because price was still pushing up. You can see this was the highest high, this was the highest low. So you might have thought price might be pushing up. But if you notice on my chart, I just marked that level because I was anticipating that retracement based off the rejection of the 50 level or the 50 EMA on the daily chart. So that's where my bias was coming from. So if you were looking at it from my point of view, you could have ran a fib here. So it's from this high to this low, then you just extend it. So if you notice here, price came into our zone. There's the 50 level, there's the 61.8, slightly came above to 70.5. But if you notice, I had a zone here. So I had a rejection first. Then I had that bearish engulfing candle coming down. That right there is a sign to enter. So you can enter your sell there, stop loss above the level. Then you can aim for 1:2 or 1:3. Then you can execute your trade. So yesterday I did not take it because I was not on the charts. But however, when I came today, I now realized that, okay, I've got this highest high. I've got this highest low based on this highest low here. So it's an uptrend. Then I had a lower high here, which is this high here. And I had a lower low here. So I've got this higher low, then I've got a lower low. So for me, this is a possible change in trend direction. Can price push down? Yes, it can. Can price push back up? Yes, it can. Price can do anything, but based on what I was seeing, I ran my fib from this high here, right here, this lower high to this lower low. Then I just drag it into the future like that. So if you notice, again, price trickled back into our point of interest. We hit the 50 level and the 61.8, just as the book says, and we had this nice bearish engulfing candle right here. So I'll show you just now on my phone. This is my entry, and on this particular trade, it wasn't such a big trade for me. I just wanted to take it so that I show you guys an example that you can actually follow these strategies in the book and you can still make something. So entry, take profit starts here, because sometimes price will hit equal lows and it can still push up. So this is part of like trade management. When you enter, where are you expecting to take profit? So the normal TP for me when I start scaling out, if I use a fib, is always 0.0 level, which is usually the lowest part if you've run your fib. Then the next one will be TP1. The TP1 is lining up with this order block. You can see I've got my red zone there lined up. So I'm looking forward for price to come here. So I think on this particular setup, this is actually my TP. I did not scale out here. I was just anticipating price to push to TP1 and potentially get to TP2. So I hope this makes sense. This is a setup which is still in play. So I would love to hear you guys when you eventually watch this, whatever time you watch it. Take a look at it. This is Crash 500, a synthetic index, which is found on deriv.com. I'll try to put a link on the description for those who don't have these accounts. You can also trade your currencies here on deriv.com as well. Currencies, stocks, indices, crypto, everything. They literally have everything, and they also have these assets called synthetic indices, which you can trade over the weekend and over the public holidays as well. They run like 365 days a year. So this was an example which I thought, let me just show you guys. Textbook example. We identify we've got a trend, we run our fib, price comes, give us a bearish engulfing, and we enter the trade. So for those who want to believe, seeing is believing. So let's quickly open. Let's see. I hope you guys can see my whole screen. I'm sure you can. Okay, yeah, you can. All right, so this is the setup. You can see from my phone, I took this trade. Change color here. There we go. High, higher, low, lower high, lower low. Price came here. These are my entries, and my stop loss was not outside the range. I just decided to make it tight here. And this is the TP1 and TP2 on the fib. But there's also nothing wrong with taking profits here, right? Sometimes price can still retrace and still continue to push up. That can potentially happen. So when you guys get the chance to take a look at this index, please check where price will be. If you've got questions based on how price would have moved, please do not hesitate to drop it in the comment section. Then let me quickly play the trade. Okay, I think I used the wrong player here. I used the wrong player. Sorry, guys. All right, there we go. All right, so to pop up just now, what happened? Did I close it? All right, there we go. This was an earlier trade, like in the AMs, and this is the trade I took. You can see those are the entries which you saw on that screenshot just now. TPs right there. On the 1 minute, there we go. I just wanted to show you the risk on this trade. There's literally a risk of less than $5 on both positions. So the risk to reward on this particular trade was simply a 1 to 3 or a 1 to 4. Because if you notice the running positions, they are already in about 1 is to slightly under 1 is to 4, if I'm not mistaken, because we are risking slightly under $5 and we managed to get slightly under 20 for now as the trade is still in motion. So we'll just see how it plays out. We can decide to close it at that 0 0 points. We'll see if we can get to the TPs as well. But I hope this helps you guys, for anyone who doubts the book or anyone who hasn't gone through the Candlestick Trading Bible yet. I hope this actually helps you guys. These setups are there in the charts. You simply need to wait patiently for them to show. Once you see them execute your trade, put your risk either in dollar amounts or in percentage form, whatever your trading plan is, execute the trade and just wait. Once it moves into like 1:2 profits, you move your stop loss to break even. Then you simply wait to see whether it will hit your TP or maybe it will come take you out at your break even. But the major thing is to just keep showing up, same risk every day, every trade, and the results will speak for themselves. So if this is helping you guys, please do comment, share as well. Today's Monday, so if we do have a setup in the afternoon on currencies, I'll let you guys know. If I do take a trade based on any of the strategies in the book, I'll do a recording as well, and I'll share with you guys so that you can see that these strategies in this book and these candlestick patterns, they actually work and they can make you some money. So thank you so much, guys, for joining. If you've watched until the end, thank you so much. Enjoy the rest of your day. Good trading.